Welcome to the Accendo Traders Group. This is our weekend wrap-up report for May 4th, 2008. AccendoTraders.com, effective trade plans delivered daily. And each night we have our routine. We change a little bit different for the weekend. We add in finding some information from some of the blogs that talk about the market, and we want to look at the sectors and make sure we're on the right side of some of our trades if money is coming in and out. And as always, we want to make sure that we have a life. And when we look at last week, we can see that all the major indexes were up. Basically the market was controlled by a lot of the economic data, the GDP, the FOMC policy statement, and the April employment data. Policy statement basically said this is the last cut, probably for a while, was basically the implication. But they removed the terminology of downside risk for the growth of the economy. Also on Friday we have better than expected employment data. So the market certainly ended the week well. What's interesting is on most of these days there was definitely a lot of profit taking. But again, we have this technical breakout. We can finally say with confidence that we are above the 1400 barrier and we've closed above it, didn't just reach above it. So that's certainly important to where the market is going to be going. Now you can see for this upcoming week we're back to being a little light on the economic data. So earnings may come into play a little bit more in terms of controlling the market. You can see tomorrow we have ISM services, and over the weekend the news came out that Microsoft is dropping its bid for Yahoo. Not sure how that's going to affect things tomorrow. And after the market closed tomorrow, we have CLF reporting earnings, and you can see CLF is one of our 2-for-1 splits. We have WFT, and then we have two new ones, BUC and UNP. So let's go ahead and take a look at the sectors and see which ones are moving up and down. Okay, so as we look in the sectors, we're going to see what really is jumping out at us. We can see here the hotels are looking better. We talked about it last week. We're above the 50, but you can see 304, really 310 is where we really want to see it before we go off really bullish. It could easily fall back down from here. So it's on the blah list. I'm not sure what's going on with basic materials. It is nice to see that it's bouncing at the 20 and the 50 here, but it also could go either way. Utilities, if you like them, there you go. I mean, we're breaking into new highs here. We're definitely possibly reaching up to our January highs, but so utilities look okay. Builders, consolidation mess. Casinos came up, haven't broke the 20, so I certainly wouldn't be going bullish on them. Not necessarily going to call out bearish on them either. So they're in the middle. Coal, I like that it bounced at the 20, staying above this uptrend line. So I like coal. Banks showing some strength. I think we need to get up to here around 90 before, again, we can go all off bullish. But certainly a nice higher highs here. Higher highs each time. That wick is crazy. Biotech, yeah. Okay, so here's our NASDAQ. You can see right here that the NASDAQ broke out of our consolidation that we talked about for months. Well, we finally did it. You can kind of see, though, great volume. Still got a little bit to go to get to the recent short-term uptrend line. We may make a secondary line here. We'll see. So definitely like the NASDAQ. Still a little bit more to go, though. We're in a new channel. We got to get up here to 2550, though, to really 2540 to break the January highs. Here's the Dow. You can see, though, that this uptrend line that we originally drew is still holding up as resistance. So we certainly want to break that. And you can see we're in 13,000, so that's a psychological barrier for the bulls that they can feel better about it. You can see some more resistance around 13,150. But again, like 14,000 on the S&P 500, 13,000 certainly was important. And remember, we're only down 1%. For the Dow for the year. Now that's not from the high. Here's drugs, and you can kind of see that they're at a resistance level right now. But look at that; it's not going anywhere. Internet stocks, you gotta love just this consistent move up here. No one's blazing a trail, but it's just nice moving up there. So definitely love internet stocks. So that's coal and internet. Gold, trying to find support. We'll see. If the market's definitely coming back, then gold may start to go down. Software, love it. bit. So software, internet, coal, insurance looks okay, but oil services possibly bouncing. We'll see. Not ready to go bullish on them. Retail, we talked about the rebate checks coming. Not blown away by them yet though. Stocks, gotta love stocks. Look at that. Look at these higher highs. Just great. So that's stocks, software, internet, coal I'm liking. So here's the S&P 500. We can see, ta-da, we're in above the 1400 range. We're back into that short-term uptrend line. So certainly reason to be happy and bullish on the S&P 500. Not sure if I like that sell-off, but that wick, but we'll see. Transports, just saying, well, as oil's going down, notice how transports are going up. But this is possibly an evening star sending us down. So I'm not sure which way I'm going to go with transports for right now. Brokers, this is great for the S&P 500. Brokers are the biggest percentage for the sector, and they're finally taking off. Hopefully we can get into this sector here to where we're getting up to these February and January highs. You can see we've got a long way to go to get to our January high. But I like brokers. I'm going to put them in there anyway. Natural gas, possibly bouncing, liking those. So again, we got casinos. I like internet. I like software. Liking that oil is bouncing, but not really sure which way it's going to go. Love the stocks. Love the brokers. Love natural gas. All those bullish sectors. And then the oil index, liking that bullish. I'm not really seeing anything bearish. Casinos is the closest thing to bearish, but even that has a little bit more to come back down before I would go all off bearish on casinos. Okay, now we're ready to go to the educational portion of our video, and we've been focusing on the mental side, the psychology of trading, using the book Trading in the Zone by Mark Douglas, and the first section is the shift to mental analysis. And when we last spoke, we talked about that your fears will act against you in such a way that it'll cause the very thing that you're afraid of to actually happen. It's one of those self-fulfilling prophecy things that, you say bad things are going to happen to you and bad things happen. And so it's the same thing in the market, that when you're afraid of being wrong, you're afraid of losing money, it's hard for you to psychologically come over that barrier and to act upon the signals that you're seeing in the market. The other side of that is that because you have a fear of the market, sometimes you don't see the things that other people are seeing. It's one of those things that, it's the backseat driver. It's the hindsight that when the thing has moved on and the event has occurred and you're looking back at it and you're saying to yourself, well, why didn't I see it then? Or I knew that would happen. What happened there? And a lot of times it's because of your fear that it's affecting your processing of information, because it's sort of suppressing things that either you do or do not want to see. How many times have we been in a relationship? Hopefully not that many, and your friends came up to you and said, "Oh, he or she's not good for you, man. You really need to see this." And you're like, but I love him or her. And it's kind of the same thing in the market, that you fall in love with a stock, you fall in love with a trade, and that love, or you're scared of falling in love, or you're scared of relationships, and that affects how you perceive relationship. It affects how you perceive the market. It's now that perception is now tainted, and you only see what you really want to see. Everything's there for you to interpret and make decisions upon, but your fear can taint it, and you're only making decisions upon what you're allowing your mind to see, and not over the whole thing. And, so he ends by saying it's extremely difficult to perceive that the source of these problems is our inappropriate attitudes. The source of our trading difficulties is internal, derived from our state of mind. And basically, again, what we're saying here is that we have to come to the realization that most of our problems are caused by us. And we have to understand that we have to overcome how we perceive the market, overcome how we interact with the market, in order to be able to become successful in the market. We have to understand that it's not the market against us. It's just the market and us interacting and interpreting the market moves. Okay, so there's our podcast. To get the full version, as you know, especially on the weekend, we really don't have enough time to get everything in there. So the podcast version has the full version for you. Continue private feedback. We got some feedback this week that we're trying to tweak things. We've got some developers working on things. And finally, to correlate with our educational portion, check out my blog. We're working on the trade plan and how to set up your own. A lot of the more day-to-day detailed information is located there. Thanks, guys, and I will see you tomorrow.